What's up, everybody? It's Alex. Today we've got 4 trades lined up for you. Okay, it doesn't really get much better than today, I think, when it comes to high probability of winning. Okay, so we're chasing smaller moves, although we've got one phenomenal trade here planned on Burlington. If you haven't seen our last video on how exactly to trade Burlington, I need you to go back and watch that so you can actually get the confidence and the details on exactly how you can trade this thing today. It's a super high probability setup, and we continue with it today, noticing that it is following exactly what we planned so far. No significant gap up equals calls at the open for a 10 plus point move to the upside, reversing the puts by the end of the day at some point once we set in that top. Okay, so I just went over that super quickly, but if you're a little confused, you're not exactly sure what to do, you need to go back and watch the last video. That's our first trade for the day. So usually I give you market context. I give you what is the overall, what's happening with the market. We're going straight into the trades today, and then we'll go over the market context after. So switch things up a bit today. Okay, like I said, super high probability to win on all the trades we've got planned for today. So let's go ahead and get into the next trade, Best Buy. Now, guys, 5 out of the last 6 times Best Buy is bearish continuation post earnings, and 5 out of those 6 times your best strategy is shorting the bounce. Okay, so that's exactly what you want to do today. You want to short the bounce on Best Buy. Go back and look at the charts yourself if you want to. I've already looked at them. 5 out of 6 times it drops after earnings for 3+ days. Okay, so that's exactly what we want to do here. Now, the only thing I don't like about Best Buy is it's got a low DTR. It doesn't move crazily, but it does have a very direct path, a direct direction, and so that's what we want to take advantage of. Okay, so going off the levels on this chart, going off the fact that it has a low DTR, right, the bottom level here would be about 110. So we could easily get 110 by the end of the week, but you want to be a little modest. Why? Because it's Best Buy, because Best Buy just doesn't move that much, post earnings. It's not like a crazy play, right? So 110 is your end target by the end of the week. And so basically, if you go 112s, 113 strikes, those are going to be, I believe, very, very profitable and very high probability to win. Obviously, you can go closer to the money, and actually, close to the money is pretty damn good. I mean, it's very safe, right? So just look at the option chain and decide what you think is going to be the most profitable, knowing that we have a high probability to get down to 110, but don't be surprised if, for example, we only get down to 114, 112, right? So pick your strike according to how you feel about this. Like I said, bearish continuation for multiple days. Obviously, an 8-point move in the next 3 days is not out of hand. That's exactly how this thing typically trades, and so we'll take advantage of that for sure. So bearish continuation on Best Buy. Don't be afraid to play this thing the put side, especially on the bounce. All right, if you see it bouncing, don't be afraid, okay, because this thing almost always drops after earnings. And so, like I said, we will take advantage of that, just like we'll take advantage of this high probability setup we have on Burlington. Let's get into the next trade, Starbucks. Now, this is one of my top trades from yesterday, and I continue with it. Okay, so we're already making 400% on these. Okay, from top to bottom, these are 400% sold half yesterday. Okay, and now it's rising up. So we're holding through the damn storm. It sucks, right? I mean, nobody likes holding your puts as it goes higher, but what do? We still got the direction right. We still got everything right here. And what does this mean? It's actually a good opportunity for you to enter in here today. Okay, so our end target by the end of the week is for Starbucks to hit at least 95 by the end of the week, right? So 96 strikes going to be your best bet here. I'm probably going to add to my position today, assuming nothing, no crazy spike higher happens today. Nothing crazy happens from the time of recording. That's my plan. Bearish continuation here. We love it. Tons of resistance on the overhead, top levels, okay? And you got a lot of downside here, basically at its all-time highs on this chart. So many bearish factors. So we continue bearish with Starbucks. The contracts are so cheap. You got such low implied volatility on these, right? It's a very good deal, right? Look, implied volatility of 26%. Let's go to Best Buy and Burlington. You can see it's 50%, 100%. Now, what's the beauty of trading Best Buy and Burlington after earnings is you're going to see an implied volatility discount. So by the time the market opens, these implied vol are going to go down to like 50, 40%. And for Burlington, they're going to go down to like 30%. Okay, so that's why we trade after earnings. Why? Because the DTR is the exact freaking same, guys, right? For example, Burlington, if you're buying those ahead of earnings, you get a 4-point move to the downside. That's not going to do you anything. As a matter of fact, it's actually just going to lose you money. If you wait till after earnings, we're still getting the same DTR, and we're paying way cheaper, and that's exactly why we trade after earnings. Okay, plus trading before earnings, there's no certainty exactly which way it's going to go. Once, the earnings have hit, you can get a lot more clear direction, a lot more clear idea in your mind on exactly what you want to do. So those are our three trades, right? Starbucks puts, Burlington calls, okay, and then we've got what was it? Best Buy puts. Okay, those are three high probability setups here for the day. It doesn't get much easier than that. And then our last trade is for the big ballers, hot shot callers. Okay, NASDAQ puts. Okay, so these are going to be expensive, but hey, if you got 50K, 100K plus, you can definitely take advantage of this today. Okay, so look, why are these so expensive? Let's show you this on the option chain, right? You're going to be paying $6,000, $7,000 a contract for close to the money contract. You got pretty low implied volatility. You're not paying anything crazy, and it's a very bearish chart here. Okay, let's go over the cues real quickly. Okay, so what you want to understand about the overall market, now we're going to get into the overall market context, as the NASDAQ is so bearish, and this whole rally we have currently is on the backs of banks. Okay, so look at the S&P 500 up 30 points this morning. Look at this, right? But you have to understand the NASDAQ is still bearish. The NASDAQ is not moving higher right now. Okay, it's got so much resistance overhead. It's got, I mean, look at all the failed breakout attempts, right? Without being a genius, without actually getting into any technicals here, just looking at the chart from a very simple perspective, right? Look at all the failed breakout attempts higher, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. How many failed breakout attempts lower do you have? 1, 2, which aren't really failed breakout attempts lower. They're just huge, melt ups lower, right? So if you got huge bearish buys just from, being a simple person without looking at technicals, without looking at fundamentals, anything, right? It's clear to see you got way more failed breakout attempts higher, which is not a good sign for it. It's clearly out of gas right now. Okay, so this is your bearish sector for the day. Okay, now, once again, going back to banks being the leading sector today, okay, you can see that very clearly here. Okay, look at banks today gapping up pre-market. Look at what was the other sector? Energy gapping up pre-market. So the S&P 500 is up strictly on the other sectors. It is not up on NASDAQ. Okay, so this is the weak sector you want to take advantage of. You can go close to money. You can go a little more out of the money. Basically, you'll be tracking to make $3,500 a contract probably by the end of the day, especially if it dips down all the way to 11,820. God, it's a big fucking number, guys. It's kind of hard to say, but you can make $3,000 a contract by the end of the day today. Obviously, we might make a higher low here, so lower your expectations a little. But obviously, if you're trading with this amount of money, I expect you to know what you're doing. I obviously don't need to tell you, but I am giving you that extra confirmation, that little go ahead that hey, NASDAQ looks pretty damn bearish today. And I think bearish continuation is what we expect here. So I feel like this is such an easy trade. I'll be taking advantage of that. And guys, those are your top 4 trades for the day. Okay, so let's go over that really quickly. We've got Burlington calls. We've got Best Buy puts. Okay, oh damn, this thing's actually gapping down even harder. So make sure you wait for a pretty decent bounce there. Okay, that kind of sucks. We want more meat on the bone, more downside, but anyways, it's still the plan. Bearish continuation, they already know. They're trying to get out. As soon as I say something, the institutions hear me, they're getting the fuck out, right? Because, we're pretty damn accurate here. Starbucks puts, look, making lower highs here. Look, every day, lower highs, lower highs, lower highs. So don't be, afraid when it's bouncing here. Obviously, it bounces up to like 98. Okay, trade's probably over. Or no, 98.5 is when I say the trade is over. Otherwise, until it gets to 98.5, I'm probably adding to the position. Okay, but honestly, not too much upside here. Expecting it to continue lower here, even though bouncing in the pre-market. And then Nasdaq puts here. Okay. So on top of that, we're also expecting an intraday reversal on the S&P 500. Guys, if there's a day for me to be right about every single fucking trade, it's today. So yeah, I mean, I feel very confident every single one of these trades. That's why we went over all of them here. Okay, so make sure you diversify your positioning a little. You don't have to take all of them, but you should probably split it amongst the 2 top trades you think you've got here. And guys, this is the best trading plan you'll find anywhere. So make sure you're subscribed if you haven't already. I don't know what you're doing if you're not. You're not going to find any better plan going into the day than you will here. So that is the plan for today. Drop a like if you haven't already. If you want to be on our trading plan, link down below. And if you want to follow me on Twitter, you can do that because I'll try to keep you updated sometimes there if I can. But your best way to get to me is in the comment section below. So let me know if you got any questions, what trades you're looking forward to, and let's make it a great day. We'll see you guys